What is going on, everybody, and welcome to another technical analysis where I jump into a lot of technicals I trade during the week, perhaps give you some potential entries, some exits, what I am looking at as far as zones, as I do supply and demand. So if that sounds like something you're interested in, consider subscribing. As I do also do a weekly analysis where I dive deep into my theory over what's going to happen over the next couple of weeks. And I also do daily updates at Hemi137. So check me out there on X. So before we get started, remember to hit the like button. Let's go ahead and dive right in. There's been some big news. So I know this is technicals, but with that being said, Biden has stepped down and is out of the race. That is the big news. If you watch my weekly analysis, I talked about this about over the past couple of weeks. There's been a lot of speculation about potentially Biden dropping out. Then going into this weekend, there was heavy speculation that it would be today, and that's exactly what it was. As he dropped out, and essentially endorsing Harris. Now, you can always check out that video and get more in depth. Like I said, this is a more technical video, but we want to know how that is going to affect the market. As of right now, the market is currently holding, so we'll see what happens overnight. It may be a more positive sentiment as his mental health has been on the decline over the past couple of months. They've been putting that on the display. So we'll see again how that affects the market. That may be a positive sentiment as there's been a lot of turmoil. And something I've stated, you have to be very, very careful because once there starts gaining a lot of negative momentum to the downside, that could be very, very bad. And we're starting to slowly pile that on going into this earnings. And again, the next 2 to 3 weeks are going to be extremely uh, flooded with information. So that is one thing you definitely have to keep in mind on what's about ready to happen. So with all that being said, let's go ahead and get some technicals. Now, one thing we did see last week is we broke below on Friday. Essentially, we did some really heavy selling. We broke below the 20 EMA. I only use the 20, the 50, and the 100 or the 200. I don't really use a 100. The 100 can provide a pretty solid bounce, but ultimately, I really look for the 200 EMA on the daily. And then I have a lot of zones. So a lot of these zones look really tiny. I do play on the hourly when I'm trading, day trading typically, or any kind of entry. So I'll really kind of look at the daily zones, and then I'll even dial it down to the 1 hour when I start looking for actual entries. So with that being said, we're breaking below. So this key point right here, the 55.35, will be important tomorrow. So if we remain below that, I can see us potentially even dropping all the way down to this zone at the 54.31. Now this was a solid support here, which was resistance before. We might get a nice pop back up to retest this 55.35 tomorrow. But again, ultimately, we're going to have some big earnings, especially Tuesday this week is going to be very big. You got Google and you have Tesla. Again, not expecting a lot from Tesla, but it's more forward guidance for Tesla. Google, there may be some backlash, and that's something you really have to be mindful of. They've done very well. So you have to understand that they are trying to schedule these earnings in a fashion in which you have a lot of good mixed with bad earnings to try to keep the market propped up. So if you have a good mix between the two, that will help, especially because anything that is AI infrastructure has been doing very solid compared to a lot of the value out there that's been getting absolutely hammered. But we have started to see value start to pick up. So you do gotta keep that in mind. So again, very critical levels we are playing here this week. If we do start getting some heavy selling around here, that's going to be concerning because we need to hold the 54.30. Again, the fear we're driving on now is unrelated to recessionary numbers. So you have to keep that in mind. If we start cutting rapidly, it could, again, I talked about, I always ask to go after my weekly update because I get more in depth on this kind of stuff and talk about what's going on. Because if it starts gaining momentum and then we just start selling off and start cutting rapidly, again, understand what the underlying truth is that it's a banking issue problem. It has nothing to do with politics or any of these other things. It's their normal cycles. You have to understand that the banking system in itself needs to be essentially we need to rein in the spending and ultimately understand that again the banks are in a very bad situation. So is the consumer. But with that being said, if they start pricing in a recession, we could potentially even see this other level down here at the 50.36. Again, on average, a recession priced in is roughly around 42%, and that would drop us really, really low. I think you're looking kind of like around that 3,400 level, the 3,200 level from where we're currently sitting at. People think it's going to get worse, especially because the data is looking really bad. So again, highly check out that video. That's why you should have a thesis going into each and every week. I think that's important to establish that. Don't get too far ahead of yourself because things can change very quickly. And then also correlate that with, again, your technical analysis. So again, very important levels this week. Again, watch the 55.35 and watch the 54.28. Again, very critical support here. If it does start breaking that, you can fill this gap here really quickly, and then you might get some heavy selling. It's not saying it can hit the 200, especially when you start talking about the 200. This thing can retreat a lot sooner than this, essentially that 5K mark. It could start picking up earlier at some of these other zones, the 5,100 mark, and just bounce back. But the problem is the closer it gets and actually starts to touch it, that is concerning. So just keep that, especially in the higher time frame. So that's what we're watching there. Let's take a look at Bitcoin. Bitcoin's actually been rallying with all the stuff going on with Trump. Again, we've kind of reclaimed this 62K level. We've been consolidating here for a while. What I've always stated is typically you'll get some sort of break, liquidation before this thing makes a massive rip to the upside, or it could be to the downside. But ultimately, again, I think we are going to price in a recession. I think Bitcoin and AI and humanoids will essentially guide that whole bull run on the next bull run. But again, you have to price in the fear. You have to let recession happen first. So I wouldn't be surprised if we continue to chop in here, maybe even revisit this 52K mark again, maybe even see 56 or 47 or 46K mark at some point as well. So you do have to keep that in mind. But that's what I'm looking for here. I do like these large bands of consolidation. Means a bigger move, I believe, is going to come. But again, we don't know how much more Bitcoin is going to move up. We could see 90K, maybe 100K. It really just depends. You have a lot of institutions in here too, so you have to be very careful of that. So this level here, again, the 73K mark is going to be important. And then again, kind of just bounce in between these two ranges. So we'll see what happens there. But yeah, Bitcoin is still looking very healthy in the current, especially if Trump makes it. It will. Trump is definitely leading on the crypto side, so I think crypto can really have a massive bull run if he does win during the elections. He's got a couple of months away to here. That kind of just aligns with the bull run anyway, as far as when you're looking at the halving, and it's essentially like 6 to 7 months after the halving to where you actually get your true bull run. That would all line up with the election and everything as well. So do keep that in mind moving forward there. Now, Tesla again had some delays in robo taxis. It does look like we're starting to create a big bear flag here. I've talked about this before on the weekly here. You have this massive wedge that we're breaking out of. I still think this thing could potentially retest down to 200. I'm looking to add more here at the 200 and see where this goes. Ultimately, again, if we start getting a lot of fear towards the downside, it's nothing major until they start pricing or massive cutting rates. That's when things are really bad. But again, there's a lot of uncertainty. When there's uncertainty, the market doesn't like that. The market likes to know what's going to happen in the next 6 months. So you have to keep that in mind. But as of right now, we're kind of just really floating around this 250 mark. Again, they have earnings on Tuesday. That could be our earnings run. If they have a bad earnings, which I'm expecting them, it's really going to be based off of forward guidance. That will dictate where we go from here. So just keep that in mind. But if this thing really starts getting more juice back up, this thing could really start ripping. So just be mindful of that. Again, kind of watching this key level down here at 220, 200 will be important. Otherwise, this thing could start really ripping up. And I think it will lead the charge when you talk about AI and humanoids moving forward. Amazon is another big one I do want to watch as we are starting to get some selling here. We'll see if this thing could really start selling. It's got a nice support here, roughly around the 160 mark. So kind of really watching that. But this massive red candle, I think, could potentially start selling again. If you look at this, it's essentially since what is this February, this thing has gone absolutely parabolic and ran up. I mean, if you even look further back, which 2022 is essentially around the bottom, but this thing hit $81 and essentially gone parabolic. The whole market's looked like this essentially since we paused. So we'll see how we continue to play out. But another one I could potentially really like if it starts selling off heavy. But again, this massive, right, our current top right now is about 200. Again, I think this can start pulling back, potentially even down to the 125 if we start getting a lot of fear. Again, when you start pricing in fear, it's all about the momentum. If you continue to get more bad news on top of bad news, that could be really bad. And then Shopify is another big one I want to really look at and carefully watch. Again, it's back to that critical level of $60 here. If it does break this and break essentially this trend line, I do believe we could potentially even see $30 again. Again, it all just depends, but it's one of the first one. Amazon and Shopify always sell a lot. And this is something also to understand is when you got tech, when you got finance, when you got gold, when you got all these other essentially industries, bonds, all selling off at the same time, that is massive fear. And when you have all this speculation about Biden, about Harris, about Trump, assassination, there's a lot of speculation. We don't really know what's going on. That will draw a lot of fear and panic in the market. And again, over the next couple of months, now that Harris is essentially going to take Biden's place, it could lead to a lot of fear. So you have to keep that in mind. Let's take a quick look at Apple here. We are seeing some nice pullbacks. I really like Apple more here around the 192 because we really haven't tested this level since we broke it up. Again, historical buybacks really kind of drew this up. We're going to have to see on earnings, which is 8-1, what they do here. Again, they're going to report another bad quarter of earnings because essentially interest rates haven't done any better, and another bad quarter earnings just because they haven't created anything really new. They do have bigger screens coming out, so that could guide the next level up for Apple. But again, we have to wait and see how that does play out. Let's take out Nvda, some of the Mag 7 here. Nvda, because of ASML, there's been some massive selling. In my opinion, to even think about even getting in here, ideally we would really like it here at the 47. But ultimately, best price for this potentially is around $69. I think you could potentially start looking at it. In my opinion, I would really like it down here. The only problem with Nvidia is we've had such a massive run up. At this point, I do believe it will still do well over the next potentially 2 years, but at some point, it's going to get to the point where it's not going to do as well. So just understand that Nvidia moves massive like this every couple of years, and then it just kind of consolidates for multiple years. So kind of like Tesla does as well. So just keep that in mind. So I am keeping that on watch, and we'll continue to see how that plays. I talked about PayPal. PayPal has been really choppy. It's been doing well. It's been still holding this 58 level. It can, if we do start selling heavy, I do see this potentially reaching the 51 again. But again, it really just depends on the fear. But ultimately, I think this is still a very good steal of deal here, roughly around these levels, especially if you're looking 5-10 years down the road. This is plenty of time to be buying up shares for PayPal. I think it's going to reverse here, potentially over the next year or so, year or two. And then get a massive run, especially when the bull market starts coming back, when they're having to turn on the printers. But ultimately understand that you still got a little bit more time before that actually happens. So, and then we did have CloudStrike and Microsoft, which is something I talked about. Be interesting to see how they do in a full week with essentially the down period. I guess ultimately it was CrowdStrike's problem. Again, could potentially be a null pointer. But nonetheless, for those people who don't do programming, essentially, we'll just say that it ultimately crashed everything on Friday. Airlines were down, banks were down. Nonetheless, we'll continue to watch and see what happens here. But Microsoft maybe even start pulling off even more. You got a solid support here at the 350 mark. But again, Microsoft continuing to grind and lead the way along with many other of these Mag 7. So just keep that in mind. Once he starts selling off, though, that would be major concerning because these value and small caps will not be holding up the market. Although you are starting to see some strength in them, which is normal for a rotation. But ultimately, when the financials and everything else start falling off, it's going to be a big, big problem. So we'll continue to watch and see what happens there. Like I said, we've seen a lot of value do very well. Boeing, again, continuing to struggle, but consolidating a lot, like I've stated, between the 200 and roughly around the 172 mark. So we'll continue to watch the consolidation that goes on here. Again, I think if it does get taken over, this thing could potentially skyrocket because of that. But ultimately, we'll see what happens there. And then as far as I do want to take a look at what is going on with Chipotle. I had just seen it here. CMG, there it is. So this has been doing some massive selling because of everything that's going on. Really like it down here. It's not saying it will hit this, but if you can get back down to the $40 mark, I think it would be a fantastic buy to get Chipotle. But again, that's a solid support there. So we'll see what happens. You could even have almost two zones stacked on top of each other right here. But essentially anything from the 42 mark to the 36 mark might be a good buy. Maybe even go lower than that. We'll see. This thing did hammer down to at least 26. It's been massively pushing up with everything going on. Despite prices being so high, they are starting to see, we're seeing this with Domino's as well, is a lot of these good, solid, like fast food companies or chains or popular chains are starting to fall off because people just can't afford extra cost. We saw the massive amount of people on Netflix. They've essentially doubled their subscriber count, so that's something to keep in mind moving forward. But then, of course, you got JPM, which you're starting to see an ascending wedge here, which means that this thing can retrace 75% of the move. So roughly looking around 160, this thing could potentially dive down to. I think there's a strong possibility with everything that's potentially could be happening. So kind of looking at that, but ultimately right now, we're really kind of looking to see if it will break this trend line here. So you're really kind of looking at a break below 200 would not be very good for JPM. It's been kind of consolidating and slowly grinding up or attempting to grind up. So I think this is going to end here pretty shortly, and then you'll probably at least see 170. So really kind of watching that support again around the 200 and see what happens there with JPM. But then as far as anything else, like I said, there's a lot of value that's doing very well. So if you bought some value, Nike, that's not Nike. Nike could be a potential buy in the future, but as of right now, it's still getting beat up quite a bit. It could even, I think, if it hits around 54, it'd definitely be probably a major buy around that area. That's a really solid support around 55. So it could drop another like $15 or so, and this thing could really, you could probably really get a good buy for Nike at that point. They do offer a dividend. It's not fantastic, but I mean, it's something, and you can get the equity in essentially in the stock as well. Once it starts recovering, we don't know how long it's going to take, and the market might just continue to grind sideways as big tech starts to sell off. But again, we'll see what happens there. So again, I don't want to make this video too big. Again, there's a lot more on the analysis side. There's a lot more to talk about as far as the technical side. Things are starting to turn over, which is a positive thing and something I've talked about. You have to kind of wait for everything to turn over. And then once things start turning over, then you can pile in and then start pushing on your way up. But until that happens, don't try to force anything. Just try to let things happen and play out, and keep your mind busy and look at charts, look at financials, see what good stocks there are that you really want to watch, and then kind of go from there. So, but with all that being said, again, this is financial advice. Be patient. We got a couple things I've called out Tesla, Palantir, called a lot of these big ones that have been running up for a while. It's not a bad time again to take profit. Just kind of wait for things to kind of settle down, especially in a lot of uncertainty going into the election. There's going to be a lot of volatility. Be ready to pounce and then take advantage when things pull back, and then kind of go from there. So with everything being said, have a great day, and I'll see you guys on the field.